Welcome back to yet another exciting week on the Lazy Money Game. This week's episode is going to be a bit different since I have been asked a question about how to keep being motivated on your financially independency journey. So I will try and answer that question throughout this episode and how I do myself to keep my motivation high despite the fact that I started at the worst possible time, since I really think this serves as a good example on how you can keep being motivated and not panic. So let's start from scratch by defining this FIRE, financial independence, retire early. And if you have been following my channel, then you know that I put much more emphasis on the first two words than on the second two words, since for me, financial independence is the goal. Whether or not you want to retire early is a completely different ballgame. So I will try and put some different levels to this financial independency so you can see at what level you are and how close you are to your goal of becoming financially independent. So let's start by defining the different levels. I know that this could have been done very differently. When it comes to FIRE, some people are talking about 3 levels or 5 levels or 10 levels or even 20 levels. Personally, for me, I think it makes sense to have these 8 levels, since I think it is sufficient to cover the journey that you have to go through without going into too much detail or too little detail. So if we start by level 1, financial dependency. Everyone starts here because you are completely dependent on your parents to begin with, since they are providing all the income which needs to be there in order to cover your expenses. If you then go to level 2, financial solvency, this is the level where you are capable of meeting all your obligations by the income that you make. So you are no longer dependent on external sources of income which doesn't come from your own money. If we then move to level 3, financial stability, this is where you're no longer just financially solvent, but you're a bit more stable, and the stability comes from the fact that you have built an emergency fund. But how big should the emergency fund be? I have seen everything from $1,000 and all the way up to 6 months of salary in your emergency fund, depending on who you ask. And if you go a bit further, for instance, if you have read The Intelligent Investor, there you would see that Benjamin Graham advised that you have at least 12 months of salary saved in your financial emergency fund if you are only invested in stocks. But at this level, when you are at level 3, then I think it's fair to assume that you are not even starting your investing yet. So probably something between $1,000 and up to 6 months of saving, depending on how much stability you would like or how risk averse you are. If we then continue to level 4, debt freedom, which would be the next step, then this really depends on who you ask, because in the FIRE movement some people will say, well, you can't have credit card loans or you can't have student loans, then you are not in debt freedom. Other people will take it a step further and say, well, if you owe anything on your mortgage payments, then that means that you are not debt free. So depending on which definition you use, you will stay for level 4 for a long time, since it's very common to take mortgage loans of 10, 20 or even 30 years. So the definition here really depends on who you ask. But if you just look to the word and saying debt freedom, well, as long as you have that, then you can argue that you should be kept at level 4. So this really just depends on who you ask. So if we then take one step up to level 5, barista financial independence or coasting financial independence, this means that you would be capable of stepping down from your more stressful and high-paying job to a barista job or another part-time job where the only thing that you would need from your salary is to live from the age that you have now and until you would have the regular retirement, since you have been capable of saving up enough from your previous job to actually live the last period of your life after you have turned 65 or whenever it is common in your country to retire. So the barista financial independence means that you are capable of stepping down from a more stressful job and simply just have to live off the income from a less stressful job and be capable of living the rest of your life from the savings that you have previously made. If we then move one step further up the ladder to level 6, financial security, this is when you have accumulated enough wealth to actually survive in case you lose your job. This is not where you want to live from, but in reality you would be able to survive. So this is simply just covering your absolute basic needs like rent and food and clothes. This doesn't even cover a Netflix subscription or internet or a mobile phone or anything like that. This is simply, would you be capable of surviving? That is financial security. If we then move one step further up the ladder to financial flexibility, this is where, depending on how it's going in the financial market, that you will be capable of living from it. So in good years you will have more flexibility, in bad years you will be able to survive from it, but little more than just survive. So it is a step up compared to the financial security, but you are still not completely financially independent. And then finally we arrive at step number 8, financial independence. This is where, no matter how the market conditions are, more or less, you will be completely financially independent. So this is where you feel that you have enough security to go and quit your job in case you want to keep the same standard of living as you have previously done. Then I know there will be some people who would say, shouldn't there be a level 9 or a level 10 if you want to increase your spendings beyond what you're currently doing? And of course you can argue and saying that there should be more levels than just keeping the current lifestyle that you have. But for me, that's not really interesting to talk about on this channel, because everything here is about getting to the stage of level 8 and being financially independent. What comes after that is of less interest to me. So these are the definitions which I will continue to refer to for the remainder of this episode, since I was actually asked the question about how I keep up my motivation within my financial independence journey. And then, of course, I would also answer the question where I would put myself or rank myself within these 8 levels. So I'm definitely not at level 1, since I am not relying on my parents to pay my expenses. Financial solvency, I can definitely also pay my bills, so I'm also more than level 2. Financial stability, I would say that I have my emergency fund in place, otherwise I wouldn't be investing at all. So I would probably put myself here at level 4, since I am nowhere near to being able to quit my stressful job in order to do this barista financially independence yet. Because if you look to my portfolio, you can see that in the good months so far I have been making around $200, and I don't really consider that to be something that I can live from. So I would probably rank myself here at level 4. So how can I continue to improve on my situation? How can I keep finding the motivation on continuing this journey? So what motivates me to keep going despite the fact that I am heavily down in my portfolio is simply just by looking at my numbers and my long-term goal. So for instance, if you say that you have monthly expenses of $3,000, it might be more, it might be less. This is simply just to give an example. This adds up to a yearly expense of $36,000. Then if you take my portfolio and say my yearly income is currently estimated to be around $1,912, then divided by 12 you get $160 every month. If you then take your $160 and divide by your monthly expenses, that means that the portfolio is currently capable of paying for 5.3% of your monthly expenses. So what motivates me is looking at this number and trying to increase it bit by bit, slowly and surely. I will get there. I know that I'm overstating this number quite a bit, since I'm living in Denmark and I have to pay more than 15% in tax from my capital gain on my dividends, since we in Denmark are taxed by either 27% or 42% depending on the amount that you are earning. But this is simply just to show the example of what motivates me. I know that the numbers would be different. Of course, my monthly spending and my yearly spending might also be a bit different from the numbers which I have presented here, but this is simply to put some numbers on it just to illustrate the point. Let's continue on the experiment here. If you take a look at my portfolio, you can see that I have invested close to $85,000 in order to gain this yearly dividend of around $2,000. If we then look to what that actually gives from a current yield perspective, only in the dividends, that is 2.26%. You can of course argue and say, well, if I haven't made all these bad investments, or I haven't been this unlucky or unsuccessful to invest in the companies at the time that I did, I could have paid $63,500 instead for the companies which are still paying a dividend, which would give me a higher yield, which is a little above 3%. And these numbers actually matters quite a lot, because the next question will obviously be, how much would you need to invest in order to keep your current lifestyle? So with my portfolio, where I have invested $85,000, and with the low yield, then I would need around $1.6 million invested. If we instead take the high percentage, if I have only invested in the companies which are still paying a dividend, then I would need around $1.2 million. So we see here that there actually is a difference of around $400,000 which needs to be invested, depending on how successful you are in choosing the different companies. What I actually find quite interesting is when you are talking about financial independency, or in general in this FIRE movement, most people say that you need 25 times your yearly income in order to be financially independent. So if we say here 25 times the $36,000, that gives $900,000. So a number which is substantially lower than the estimates which I come up with, and that is of course because you would be capable of selling some of your stocks at some point when you have to scale down eventually as you become older. And I know that these numbers can seem quite intimidating when taking a look at them, because you would say, I will never get to $900,000, or I will definitely never get to $1.6 million. Well, this is what motivates me, because every time that I'm adding more into my portfolio, I can see that my numbers are increasing and that I'm getting closer to my goal. Personally, I like to set up some smaller targets. For instance, I was really happy when I saw that I crossed $1,000 on yearly dividends received. And whatever you can do in order to find the motivation that helps you to keep on sticking to your plan, the sooner you will get there, I would say. And one thing which I think is important to mention here is, even if you don't make it to level 8, to the financial independence, it still makes a difference for you financially if you are capable of going one level further up the ladder, just because you will be more financially secure. So feel free to comment in the section below how far you are on your own financial independence journey. For instance, if you are at level 2 or level 3, what are you doing in order to try and move up the levels? If you are already at level 7 or 8, please share what you have done in order to get there, so you can inspire the rest of us. So hopefully that answered the question regarding some different levels of financial independency and what actually motivates me to keep on sticking to my strategy, despite the fact that my portfolio is severely down in value and I have companies which have slashed the dividends. This is simply just to show and share my personal journey with you. And if we then take a closer look at my portfolio, we can see that there were a red circle for this week's episode, meaning that my portfolio has lost value. I'm actually down around $2,300 compared to last week, and I have added $500 more into the portfolio this week. They all went into Verizon Communications. This was a mixture of dividends received and fresh capital. The dividends which I have received for this week was from AbbVie, which is my biggest dividend payer. So you can see here, they paid me a little more than $100. And then I have also received some dividends from Realty Income Corp. So if we take a closer look at the dividends tab here, we can see that I have received close to $200 for this month as well. So hopefully I have succeeded in motivating more of you to sticking to your strategy, despite the fact that I am down in value with my portfolio. And if you have a better idea of how to keep motivating people to sticking to a strategy, then please share in the comment section below. That will really be helpful to the community. And until I see you next Sunday, remember to comment, like and subscribe. Bye!